What's going on, guys? It's GBP baby. Welcome to another backtesting video. Today I'm going to be looking at price action on Tuesday the 1st of August because well, I'm going to be looking at this week in general. We haven't actually finished trading this week yet, but this week has been very interesting. I feel like I've missed out on a lot of opportunity, so I wanted to go back through the charts, just have a look at what was available, and yeah, run through some trade executions because I know you guys love that stuff. So I'm just gonna quickly get my stuff all lined up for us. Oh, I should be fine. And I'm also gonna get the macros done, so I'll be right back. Right, so I've marked out all the macros. I'll just make it more clear for you guys. So these between between here and here are the macros. So we have a 230. I'm gonna mark them all out actually so that you guys can see it better. Sorry. Alright, cool. So this should all be more clear. We have the London kill zone and we've got the macros marked out. This is Tuesday. I'm gonna start with, and then we're gonna work our way through the week. Wow, yeah, through the week. It's quite choppy price action here, but there are entries available and stuff. So I'm just gonna get straight into things really. I do want to quickly mark out the Asian range because that is what you should be referring to when looking at London. And what I do is I mark out the high of the Asian range, which will be here, and the low of the Asian range. So let's just do that very quickly. Low would be here, and then we'll zoom in. I usually do my backtesting on a 5-minute. If you watch my previous backtesting videos, you'll know this. However, because we're looking at macros, I will be doing this on on the 1 minute. So yeah, so you can see we've got the midnight candle. We open up. In fact, let's mark out the midnight. We should always mark out midnight to see where, and refer to this to see where price is. And that should be drawn out to about 11 AM, but cool. So you see we trade up, we take out this high, during this macro, we take out Asia's high during the macro. Remember, all this week I was anticipating lower prices because we had sell side liquidity resting here, and then even lower I wanted to see us trade into this fair value gap. This blue box is a fair value gap. So let's go. We've got to go into this with the mindset that we have a bearish bias. So after we take out the buy side of Asia, we should then anticipate the sell side to get taken, and that's what happens. And you can see the entry is offered during the macros. So we're going to get straight into the macros, and I'm going to just draw out these relative equal highs as buy side liquidity because that's exactly what it is. So this swing high here and this swing high here makes buy side liquidity. So yeah, buy side liquidity. And you can see that gets taken. We'll put that in the middle. What am I doing? Middle. And we'll put it on the right just so we can see that's buy side liquidity taken. So as this buy side liquidity gets taken, we then get a break in market structure. Where is the break in market structure? Here. As soon as this candle closes, that's the break in market structure, and we have a breaker here. Now, quite an advanced entry, which I learned from ICT, is to sell as price goes into the anticipated breaker. So I'm going to actually enter that make that a sell opportunity. But first, let me just mark this out as break of structure. We'll make it black, and we'll make it a little bit thicker. So we have our breaking market structure there, and we also have a fair value gap. This I anticipate getting left open. Why? Because that is a breakaway gap, so I anticipate this not to get traded to. So that's a breakaway gap. We can make that yellow, and I'll just, there we go. And then I am going to put a sell symbol because this is where I would have liked to have sold. And this is how you backtest, guys. Yeah, by going in your charts and positioning things where you'd want to be entering, it trains your brain to anticipate these things when you're live. So make sure you go and do this yourself. So this is a breaker. Why is this a breaker? We've got a high, a low, and a high, and then we break. So this is the breaker. So as soon as price trades back into it here, we can sell in that, and that's why I'm putting this sell sign here. I am going to move this to the front, bring to front, and I'll bring this to the front as well. Cool, so we sell here at the breaker, and I'm also going to mark out the 50% level off the breaker. If we look at the entire range, you can see we actually touched 50% level there, but I'm looking at the volume, so let me just mark out 50%. There we go, breaker. So that's our first sell, and then we have a swing low here. This is also a breaking structure here, and there's another entry here for the fair value gap. So you know, these are both beautiful entries, so we can mark this out as a breaking market structure. This is again hinting to low prices, and we can anticipate this low to get ran. And yeah, we can anticipate these swing lows to get ran, and this low to get ran, which it does. But yeah, let's mark this out, breaker structure. Make that black, and we'll make it thicker. And we got another fair value gap, which is where we can enter. And again, this is all in the macro, so this is adding confluence as to why we should be entering our position here. Make this orange, and we can put a sell here, and as price returns into it here. We'll also mark out the 50% level off that, and look how price respects it. Although we trade just a bit above it, look how we displace away from that. That's what we like to see. There, so we have entry there. So these are both entries, and look at this short-term high gets taken, trade up to that, and then we break lower again, and we run into this south side liquidity resting here, which is also the low of Asia. So remember, we anticipate that getting taken, because remember, we took out Asia's high here, so now we anticipate Asia's low to get taken, and that's what happens. South side liquidity. And you could technically sell in this, because this is a mitigation block, and I believe we can treat that the same way we do a breaker in terms of selling as price trades through it. Because when we see things like this, we want to see price just run through it. Like, you want to see price run through breakers. Like here, we just run straight through it, touch it, and continue lower. So these are quite advanced entries, not gonna lie, but I'd probably take off some of my position below this swing low here. I'd probably take a partial there, so let's mark that out as a partial. My partials I like to make orange, and then I'd close my full position below here, so I'd buy back here. And that's one trade entered in the macro as well, so yeah, it's pretty clean, to be honest. Low, high, low, low break, so this is a breaker. Again, we'll make it blue like the other one, and that's why I'm putting a sell here, because I've done this before, but as soon as price trades below the 50% level of the breaker, I want to sell, because I know it's going to start running down to this, you know. In fact, my partials should probably get put below here, relative equal lows. Yeah, because price is going to run, then it does, and then we come down, take out the south side. We then consolidate, take out these highs. Do we have another breaking market structure? Wow, here we do. Here's another breaking market structure, so we can mark that out. BOS. Breaker structure. And then do we have a fair value gap? Yes, we have a fair value gap here. We'll make that orange, because fair value, we've done the other one orange, so we might as well make this one orange too. Fair value gap. That's if we wanted to enter again. And then where would we aim for now? We'd then aim for this low. Now you can see that price doesn't actually take out the low straight away. It takes it out later on, which is quite interesting. But overall, this would be another entry, because you'll see how we are trading back into this fair value gap as well, and we're respecting it. You see, and the breakaway gaps also stays intact. Ooh. Sorry, I believe it's lagging a little bit. Let's sort that out. Right, cool. So yeah, it's important to look to see how price is treating this area. Again, I wouldn't enter this until we trade back into the fair value gap, purely because, you know, although we ran highs, there would still be potential for price want to reach up here. So it's best to have that kind of confirmation once that closes energetically as well. Look at that, close below that, creating a breaking market structure. So now we can use this fair value gap as an entry, and obviously here as well. And then this is nice to see, this wick lower, that's hinting to lower prices. Price runs, and we run in, and then you can see we don't actually trade to this here, but again, partials, this is where partials is important. And if you don't know where to actually take partials, you want to take it at 50% off the current trading range. So if we look at the total range of where we expect to trade to, we can sell below these two lows here because it's in the discount. We've got premium above 50% and we've got discount below 50%. So we can sell anywhere in the discount because we're buying, we're selling in the premium and we're buying back in the discount. So there's beautiful relative equal lows and a fair value gap. So this would be a beautiful place to release some of our stops. So I can put a partial there, and then because we anticipate price to want to because we anticipate price to want to run into these swing lows here, we can leave a runner on, and then that wouldn't get executed until obviously about another 30 minutes later. So we'd have to sit through all that. Probably not the best, not the funnest of times, but it is what it is. So that's cool. Do we see another entry in here? No. However, we do break higher here, fair value gap, and at this point, remember we have a bearish bias, so we shouldn't be looking for any buys in general. So I'm gonna leave that as is. I'm just looking. If you guys see anything that I'm missing right now, by the way, honestly, feel welcome to leave. Feel welcome to leave a comment. But yeah, we have a nice breaking market structure here as well. Once we trade below this here, I don't anticipate price to want to come back above that before taking out this low, and that's what happens. You know, although we trade right up to it here, we don't come back into this range until we take out this low, then we come back up. So it's important. It's little things like this which allows you to understand price action, guys. I'm being serious, like the littlest things. So let's just write that as break of structure. So when price does start going up here, you want to make sure this continues to act as like a breakaway gap. Like you don't want to see price trade too deeply into that. So I'm going to put like measuring gap because we're already halfway down. Because remember, we have our breakaway gap up here, and we can now get a measuring gap 50% of the way down. Does that make sense? And then we're here. But me understanding breakaway gaps is something I do need to work on in general, so don't take my word for it, so to speak. So yeah, let's see. We have this massive break all the way between 5 and 7. I don't usually trade between 5 and 7, but we do have a beautiful entry here. So we run up, take out stops here. So we take out a little short-term high, and then we have a break in market structure. So we have a sweep of highs, short-term buy-side liquidity, and then we break down very low, and we have a break in market structure. So we make that black, BOS, black, middle, center, and then we have a fair value gap and an order block, so we can enter in this. Although it's not inside the macro, we can still enter in it because remember, we're expecting lower prices. This is New York Hill Zone. Let's move this lower so we can see it. Oh, sorry guys, my bad. I accidentally clicked the wrong button there. So this could be a sell. We just have this bearish order block here. Let's make that yellow. And we have a breakaway gap up here. Now, do we have a breaker? Yes, we do, and we actually trade into that low, high, low, low break, so that makes these candles, this range here, a breaker, and that, as you can see, look how price treats it, 50% level, and then we turn away and get a breaking market structure. Whoops. Right, cool. There we go. So we have a breaker, we have a bearish order block, and fair value gap. That means we trade right into that, up to the 50% level, which is a beautiful sell. And then we have a small breaking market structure. Although this is 3 candles, well, 4. 1, 2, and then break. This is a break in market structure, so this is what we want to be seeing. We could technically sell in this candle as we trade into this. This is advanced. I know it's advanced, but because to be honest, if you're not willing to want to do that kind of move, you could trade in this breaker here and then or here. So there's options, you know. So we have another breaker here. Why high, low, high, high, no, high, low. So it's actually from this high that makes the breaker. High, low, high, high, break, yeah. So this is the breaker, and as price messes with the 50% level of that, let's have a look at how it treats it. Excuse me. So we consolidate, break higher, come down. We leave this open as well, look at that. Guess that's another breakaway gap. We have an entry here, but I wouldn't sell in this. I do like to see this though, and I'd probably enter more so this would be an entry because we have a more clear break of market structure. These relative equal lows here, you see how we close below that, so anytime we retrace back up into that, I'd then want to look for a sell, another selling opportunity. I remember I have a bearish bias this week, so I was looking for this sell side to get ran. That's why I'm here, selling. So these are all moments you could be selling. Into that, selling into that sell side liquidity. Break of structure, make it thicker. We have a fair value gap here. sell. So there's all these opportunities where you could just got in. Where would the stop loss be? Above this high, but if you want to be more, safe with it, 50% of this range, or even this order block here. Another break in the market structure. Every pullback we anticipate being a run on stops. Here, run on stops. Even here, run on stops. Here, run on stops. Here, run on stops. Every pullback is a run on stops because we're going for sell side liquidity. Here, run on stops. And that's what you got. That's what you got to anticipate. Low, high break. So this is the breaker here. These candles here make the breaker. Look what happens. Straight to it and turn around. Beautiful. And matched with the fair value gap. That's what you like to see. So price can dig right up to there. So we anticipate that, which is why our stop loss will be either above here or above this candle's high. Cool. Another breaking structure here. High, low. High break. So you can see we just keep breaking and breaking and breaking lower. This is why I wanted to look at this week, because it's these kind of runs. It's these kind of runs that I want to be learning to trade because they're clean, price action's clean. Gap, enter here, and then I'd put that probably be my last entry, and then we run into this sell side here, so I'd let go of my positions right there. So let's get my blue buyback here. That'd be the end of my position. Now considering taking out sell side, I can then anticipate and look at the time. So now we've taken out sell side, I would then look for some kind of retracement. The time here 3:30, but we have a macro between 350 and 910, so we can anticipate. Remember, we've taken out sell side liquidity. We can anticipate some kind of pullback. Where to? Well, we can look at 50% of the range as a potential. Let's see. We'd want to see price trade to 50%, but we don't actually reach it. Not until later anyway. But let's see. Let's have a look at this macro. I mean, we have a break in market structure. We have a run on stops. So we run, we break higher. Does that high take out that high? Yep, so this is the break. Break of structure and buy side liquidity, because liquidity resting above this swing high, so we buy, comes back into this order block, this proportion block. Look how we respect the 50% of this range. So we can buy into that order block if we, because we've taken out that buy side, so we can buy that if we wanted. Then we push higher, fair value gap, we trade back into this order block here. Again, and then again here. breaking market structure here. So we could this could easily be like a little buy into this swing high and into these relative equal highs here. So we could just use this as relative equal highs, which is buy side liquidity, but I'm also going to put relative equal highs. How long have we been gone? 25 minutes, okay. So we can sell above that if that's just and it's all in the macro. So we can anticipate us running into the relative equal highs, fair value gap, price trades into it beautifully. Let off partials here. Why? Above these swing highs. So yeah, let off partials there. Beautiful macro. Then we continue higher. So this is the thing. We could actually we can measured move. So we can anticipate us trading up to the -1. Why? Because this is the breaker low, high, lower, low, and we break higher, right? So if we don't know, so if we wanted to leave, say, a runner on, we can anticipate us trading at least to the -1 level. We do reach the -2 level, but we can anticipate trading up to that, which we do. And then what happens? We have another macro here and here. Whether we want to run into that, I don't know if I would enter this. This would be nerving for me. Beautiful, beautiful run up. But whether I do it or not is another story. But there is a fair value gap and an order block. And we don't actually reach that -2 level, so it's not even. There's relative equal highs though. Yeah. Let's put another buy there. Let's say we did want to buy it. We buy the fair value gap. And we want to buy into this buy side liquidity, and we do. Cool. So what happens? We then break lower, breaking market structure. And we then, so we have a break. Where's the breaking market structure? Here. Mitigation anywhere? Anyone? High, low break. So this is the breaker this time. But we don't come back to that for, I don't think we come back to it at all actually. But guys, if you want the screenshots for these, don't forget to join the Discord. If you want the screenshot for these, don't forget to join the Discord. I say that again because I want the Discord community to grow. Although it is already, I can't lie. And I want to say thank you to everyone that's already in it. So we have another fair value gap here. After this breaking market structure, any trade up we can comfortably be selling. And it's in the macro, so why not? But this video is gonna come to an end now, but you're gonna have to watch the next one. I'll make sure to drop the next one as soon as possible. Where would I get out of this position? Well, there's some sell side liquidity resting below there now, isn't there? So we put sell side liquidity here, and then I could let go of my position there. So I'd buy back there. Where would I take off half my stops? Well, this swing lows look quite nice. These swing lows here as well. Or again, measured move, this high to this low. -1 level happens to be that sell side liquidity, which we've already taken, but still we anticipate some kind of response there, which we get, you know, consolidate, break. So let's put half the position getting take off here. Partials are so important, guys. So important. Then we have another macro. I don't really like this price action. I don't really trade around these times anyway, so I'm not going to get into that. And yeah, that's pretty much everything. So guys, thanks for watching, and I'll catch you in the next one. Peace.